Hello traders, welcome to the daily technical forex report for the 2nd of November. My name is Andriy Shinetsky. I am a technical analyst at ourforex.com, and as usual we begin our forecast with the Euro USD currency pair. The price demonstrated an abrupt growth and now is located a little bit below the level of resistance 1.1430. If we take a look at our volume chart with this instrument, we can note that this level contains large volume, but given that the price growth was sharp and supported by the large volume, we can consider a scenario of its breakout, which will be a great bullish signal. The growth of the pair must be keen and supported by the large volume, which will ensure us against a false breakout. A stop loss should be located under the breakout volume bar, and the potential of the deal is around 90-100 pips. So with the euro, long positions after the sure breakout of the level of resistance. The pound, the similar situation here, as the price demonstrated a huge growth supported by the increased volume. Also, we need to point out the new level of resistance, it's 1.3019. If we take a look at our volume chart, we can note that it contains increased volume, but considering that the pair is located a little bit below this mark and the recent sharp growth, we can regard a scenario of its breakout, which will be a great bullish signal. The breakout movement must be abrupt and supported by the large volume, which will ensure us against a false breakout and will be a more accurate signal for entering the market. A stop loss should be located below the breakout volume bar, and a potential of the deal is around 110-120 pips. So with the pound, long positions after the confident and keen breakout of the level of resistance. The yen. The price stopped its correction and resumed growing. Now it's located a little bit below the level of resistance, the local maximum 113.28. Hence, our previous scenario remains actual. We can consider a scenario of its breakout, which will allow us to open long positions. The breakout movement must be keen and supported by the large volume, which will be a more accurate signal for entering the market. A stop loss should be located below the breakout volume bar, and a potential of the deal is more than 100 points. So with the yen, long positions after the sure breakout of the level of resistance. If the price resumes falling, so correcting downwards, we should stay out of the market. The Canadian dollar. The pair demonstrated an abrupt drop and now is located in the middle of the local range between two strong volume levels. The first one is the level of support 1.2988. The second one is the level of resistance 1.3150. Given all these factors, we can regard new positions here only after the sure breakout of one of these levels and the confident exit of the price from the range. Moreover, the breakout movement must be keen and supported by the large volume, which will ensure us against the fake breakout. Until that, while the pair is located inside this consolidation, we should omit this instrument from our trading plan. The Australian dollar. The price showed a huge growth on the large volume yesterday and broke out the previous level of resistance, which is a great bullish signal. Besides it, we need to highlight the new support level, it's 0.7170, which contains large volume. So given all these factors, we must prefer a scenario of opening long positions. But we can enter the market only after the smooth downward correction of the price in order to obtain a more profitable entry point. A stop loss should be placed below the new level of support, and a potential of the deal is around 80 pips. So with the Australian dollar, long positions after smooth correction of the price down. And our last instrument for today is gold. The price also demonstrated an abrupt growth but is located in the middle of the local range between the level of support 12.50 and the level of resistance 12.42.50. If we take a look at our volume chart with gold, we can state that the large volume is concentrated within this range. That's why the best solution with this instrument is just to wait for the exit of the price from this range. Moreover, the breakout movement must be sharp and supported by the large volume, which will be a more reliable and secure signal for entering the market. While the pair is locked within this range, we should omit this instrument from our trading plan. Let's take a look at the sentiment of the market. This indicator totally affirms all our trading scenarios today, which is a great additional signal. As with the Canadian dollar and gold, it is necessary to wait for a sure exit of prices from local consolidations, and only after that we can regard new positions. For today it's all. Thank you guys for watching. Hope this forecast will be useful for you. Subscribe to our channel to stay in touch with the latest researches. Take care. Bye bye.